All right, good evening again. This is Dr. Tisa Silver Kennedy, founder of the Maryland Center for Collegiate Financial Wellness, and I'm here with our student loan repayment update. This is our third installment for the summer 2026, and this evening's update focuses on one group of borrowers, and that is parent borrowers. There are a lot of changes coming for parents, and we want to make sure you're prepared entering this new academic year. So for a quick agenda, I'm already through with the welcome. I'm going to get right into the key updates, and those updates concern two areas, both the borrowing of Parent Plus loans and the repayment of those loans. After we walk through those details, I've got a few reminders for you, 3 things for you to do, 3 things for you not to do, and then we'll open it up for Q&A. I'll pause the recording before we get to the questions and answers so that you can come off mute and feel comfortable that this is not going to be broadcast anywhere else. Just a quick disclaimer before we get into the information. The information shared during this evening's webinar should not be construed as personalized financial or legal advice. The best way to figure out your strategy going forward is to have a student loan strategy session so that we can look at your loans, take inventory of them, review the repayment and forgiveness options, and help point you in the right direction to help you strategically meet your goals. So I'm going to share a lot of general information this evening, and some of it you may be able to act upon, but don't just use this by itself to make your decisions. You want to make sure you take an inventory of your loans, your career path, the information we're sharing with you, what you're getting from the Department of Education and your servicers, and then use all of that to make a truly informed decision. All right, now that that's out of the way, there's a key question that you have to answer that's going to guide how you are affected by the changes that have come to Parent Plus loans as of July 1st, 2026. And the key question is, are you considered a new or legacy borrower? A new borrower is someone who will borrow or consolidate on or after July 1st of 2026. So since we are after July 1st of 2026 already, if you are going to borrow any loans now or in the future, or if you plan to consolidate your federal student loans, then you would be considered a new borrower. On the other hand, we have legacy borrowers. A legacy borrower is someone who borrowed before July 1st of 2026, and they have no plans to borrow or consolidate their loans now that were after July 1st of 2026. So if you have Parent Plus loans and you're in repayment already and you're not going to borrow anymore, then you would be considered a legacy borrower. If you have Parent Plus loans already and you borrow another one, then you'll automatically be considered a new borrower. And this distinction between new and legacy borrowers is so important because if you are a new borrower, you're going to be subjected to the new rules that went into effect for both borrowing and repayment as of July 1st of 2026. So let's talk about those major updates. The first update is that Parent Plus loans are going to have limits now. If you borrowed Parent Plus loans before, you know that you're allowed to borrow up to the cost of attendance of your student's program minus any other aid that they receive. So there was no hard or specific dollar amount that you were limited to. It just depended on the cost of attendance for your student's school. But now there's going to be a limit, both an annual limit and an aggregate limit. As for what you should do, it's going to depend on whether you are a new or a legacy borrower. If you're a legacy borrower, then under certain conditions, which I'll explain in the next slide, you can still borrow up to that cost of attendance minus other aid, just like you have been already. But for new borrowers, you're going to be subjected to a limit. You can borrow up to $20,000 per year per student. And overall per student, you can borrow up to $65,000. So the annual limit is $20,000. The aggregate or overall limit per student is going to be $65,000. And this went into effect July 1st of 2026. I want to pause for just a moment to talk about the new borrowers. Again, if you're new, in this sense is you haven't borrowed a Parent Plus loan before. You're borrowing for the first time after July 1st of 2026, then you would be subject to these rules. But I know this can get a little confusing, so I wanted to give you all kind of like a few questions to ask yourself to figure out whether or not this limit applies to you or how it will affect you. So the first question you have to ask yourself is your student enrolled in the same program of study at the same institution they were enrolled in as of June 30th, 2026? So think back to this academic year that just ended. Is your student now in the fall going to be enrolled in the same program at the same school that they were in the most recent academic year? If the answer is yes, then you have another question to ask. That question is, did you have a Parent Plus loan dispersed for that same program before July 1st of 2026? If you answer yes to both of those questions, then the loan limits do not apply to you as long as your student completes their program or is enrolled for up to 3 years continuously. So they're not withdrawing, not taking gap years or gap semesters. They have to be continuously enrolled, and you can continue to borrow up to that cost of attendance minus any other aid they receive. Now, if your student is not still enrolled in the same program of study or they're not at the same institution as they were as of June 30th, 2026, then the new loan limits would apply to you. Question number 2 is off the table. You just would be subject to those loan limits of $20,000 per student, $65,000 per student overall. The other question, though, the other part of question 2, though, is if you didn't borrow a loan yourself, did your student have a direct loan? That could be a subsidized loan or an unsubsidized loan dispersed for the same program prior to July 1st of 2026. So this is for parents who you may have not have taken out a Parent Plus loan, but your child took out a loan and they're still in the same program that they were in the previous academic year. So if your child took out a loan last academic year or prior to July 1st, then the new loan limits would not apply to you because your child was borrowing actively in a certain program and they're still in that program. If neither you or your child had a federal student loan dispersed before July 1st of 2026, then you would be considered a new borrower again. And that means that you would be subject to those new loan limits. So overall, if you're a new borrower, it's $20,000 per student per year, $65,000 overall. If you're a legacy borrower, you still have the opportunity to borrow up to the cost of attendance. However, you may not want to because some of the other changes that are coming will affect your pathways to loan forgiveness. So it's important to consider those as well. And we'll get to those in just a moment. What I want to share with you next is an update to repayment plans that are available for parents. And to answer the question, what's happening? I pulled this straight from the National Association of Student Financial Aid Administrators. What's happening is any federal Parent Plus loans borrowed on or after July 1st of this year, and that includes federal consolidation loans that include Parent Plus loans, those can only be repaid under a single new fixed repayment plan. So in layman's terms, any new loans that are borrowed, new means after July 1st of 2026. Consolidation loan counts as being a new loan as well if it was dispersed after July 1st of 2026. If you are a new borrower, then your loans can only be repaid under one repayment plan. And that's a new plan that's called the new tiered standard plan. And so a lot of people hear that and say, well, what am I supposed to do? It really depends on whether you're considered a new borrower or a legacy borrower and your overall repayment goal. If you are a legacy borrower, meaning that you borrowed before July 1st of 2026 and you haven't borrowed anything for this academic year yet, and you're on a path to loan forgiveness, do not borrow any more federal student loans, okay? This is one of those things, one of those rare things where I'm giving blanket advice to people. If you are a legacy borrower and loan forgiveness is the goal and you're on the path to it, if you borrow any additional federal student loans at this point, your path to forgiveness will close. Because one of the changes that came about July 1st was if you borrow on or after July 1st, you're considered a new borrower. That means you're subject to the new rules. The new rules say all of your loans have to be paid on the same repayment plan. The only repayment plan that will be available to you as a new borrower of Parent Plus loans is that new tiered standard plan. So if you have older loans and you have not borrowed yet for this academic year, if forgiveness is your goal, do not borrow any more federal student loans because that will immediately close your pathway to forgiveness. Also, do not consolidate your federal student loans because if you consolidate them now, because we're after July 1st, that consolidation loan will make you considered a new borrower. And if you are a new borrower, there's only one repayment plan that's going to be available to you as a parent, and that is the tiered standard plan. Okay. So for legacy borrowers, again, if you want to protect your pathway to forgiveness, don't borrow any more federal student loans. Do not consolidate your existing federal student loans. Now, if you're a completely new borrower, or if you know for sure that you have to borrow this academic year and beyond, you should go to the loan repayment calculator on studentaid.gov and estimate what the payments would be under this tiered standard plan, because for parents, that is the only repayment plan that is available to you if you borrow after July 1st of this year. And of course, explore all other financing options. There may be some other loans that are out there, may not have rates quite as low as the federal government, but the repayment plans may be more realistic for you. You may have to piece some things together, but explore all of your other financing options before you borrow Parent Plus loans. As for when, I know I've said this probably 20 times since we've been in this meeting, but all of this is effective July 1st of 2026. So again, if you don't have to borrow now, don't borrow, because the rules that we're seeing for parents are much more restrictive. There's only one repayment plan available, and there are also limitations that are going to be placed on forgiveness as well. So I know that that was a lot of information, so I wanted to just give you all 3 buckets, and you can find the bucket that works for you. And once you find that bucket, I'm going to give you information about the repayment plans that will be available to you. So for the first group of parents, parents who currently have Parent Plus loans that are in repayment and they will not borrow again, these are our true legacy borrowers. They will retain access to the 10-year standard plan, the extended plan, and the graduated plan. Okay, so these older plans will still be around if you have older Parent Plus loans and you do not borrow any loans again. The second group is for people who had Parent Plus loans and consolidated them into a direct consolidation loan that is in repayment, and they will not borrow again. This is another group of legacy borrowers, but these are the legacy borrowers that took the extra step to consolidate into a direct consolidation loan. So if you went ahead and did that, you'd also have access to income contingent repayment. Income contingent repayment is an income-driven repayment plan that qualifies for public service loan forgiveness. Income contingent repayment is going away. It's scheduled to go away in 2028. After that time, you would be shifted into income-based repayment, which is IBR. IBR is not going away. So if you already have Parent Plus loans, you consolidated them, and you're in ICR now, you can apply to switch into IBR, or you can stay in ICR until 2028 and then be automatically switched into IBR. I would suggest that you investigate that switch sooner rather than later. First, because typically payments on income-based repayment or IBR are typically cheaper than the payments on ICR. So if you can get a cheaper payment sooner, I would go ahead and explore that. The other reason why I would suggest switching out of ICR and into IBR earlier would be that we're told that ICR will sunset by July 1st of 2028, but we have no idea what that's going to look like in practice. And in my personal opinion, it's better to exert the control that you do have over switching repayment plans instead of leaving that to the Department of Education or whichever department it'll be by then. Don't leave it to them. If it's something that you can control to make things more, I don't want to say easy because it's not easy, but if you can just make things a bit more predictable or just take control of those things yourself, I would highly recommend that you do that because there are a lot of changes going on and there are a lot of things, frankly, that are getting messed up right now. All right, our last group of parents, those are parents who currently have PLUS loans in repayment and borrow another PLUS loan on or after July 1st of this year. Borrowing on or after July 1st of this year means that you become a new borrower. And if you become a new borrower, all of your loans will have to be paid through one repayment plan, and that is called the tiered standard repayment plan. It's not based on your income, it's based on the balance that you have. So if you borrow again, you're looking at a fixed repayment plan. Now, repayment plan changes spill over into loan forgiveness. So our third update is about forgiveness. What's happening is parents who borrow after July 1st will be routed into the tiered standard repayment plan. The tiered standard repayment plan is not the same as the 10-year standard plan. So the tiered standard plan does not qualify for public service loan forgiveness. Essentially, parents are having their pathway to loan forgiveness by way of income-driven repayment and public service loan forgiveness completely cut off. Because if you don't have access to an income-driven repayment plan, then you have no access to forgiveness. The forgiveness by way of either income-driven repayment or public service loan forgiveness depend on you being enrolled in a qualifying repayment plan. All of the income-driven repayment plans qualify, as well as the 10-year standard. As a new borrower, you will be moved into the tiered standard repayment plan. It's not income-driven. It's not the same as the 10-year standard plan. So that means that there is no access to PSLF. That's why it's so important to answer that question. What kind of borrower are you? Are you a new borrower or a legacy borrower? If you are a legacy borrower, that means you are not borrowing anymore. You already have your PLUS loans and you're on the path to forgiveness in this case. The worst thing that you could do is take the loans that are already on the path to forgiveness and consolidate them or borrow additional federal student loans. Because the moment that you do that, you become a new borrower. And as a new borrower, the only repayment plan that you'll have access to as a parent is the tiered standard plan. It does not qualify for IDR forgiveness. It does not qualify for public service loan forgiveness. So again, legacy borrowers, don't consolidate. Do not borrow additional federal student loans if you can avoid it. You should also confirm your current repayment plan qualifies for forgiveness either by income-driven repayment, if that's what you're going for, or public service loan forgiveness. So log into studentaid.gov, confirm your current repayment plan. If you are a new Parent Plus loan borrower, then you only have one option for repayment going forward, and that will be the new tiered standard repayment plan. Unfortunately, there is no other option because these new rules that went into effect on July 1st were really targeting parents, narrowing the options for them, and completely cutting off the pathway to loan forgiveness through IDR or PSLF. All right, so with all of that going on, we have three things for you to do. The first thing is for you to verify and document. This is so important, especially if you were on the path for PSLF or IDR forgiveness. Records are showing up incorrectly on studentaid.gov. So if you haven't already, please log into studentaid.gov. Take screenshots of your balances, your current repayment plans, the status of your loans, whether they're in repayment, deferment, whatever the case is, you want to know what the status is and make sure that they're in good standing. And also your payment counts. You may want to take the extra step of downloading your student aid text file because the things that we have been seeing with payment counts and records are just very discouraging. I believe that ultimately all of it will come back together, but I have to tell you, it's a mess right now. I can't sugarcoat it. So please verify and document your records because until everything is rectified, you may see payment counts go up and down. You may see payment amounts that don't make sense. and you need to be able to know what's your baseline, what is correct to the greatest extent that you can figure that out, but know where you are right now by verifying and documenting all of your loans. You can get the information from studentaid.gov and from your servicer portals. And it's a good idea to compare the information you see in the servicer portal with the information that you see in studentaid.gov. On some days, your servicer might be the one that has it all right. All right. The second thing to do is to stay connected. You want to make sure that your servicers have updated contact information for you. And then, in terms of connecting with reliable sources, please don't go to TikTok and stuff like that. You might find a highlight that's good, but please don't make any of your decisions based on things that you see or hear in sound bites. Studentaid.gov is the source of your loans. That's the online home of the Department of Education, who is your lender. So that's a good place to go, even though right now records are doing some mysterious things. Your servicer, of course, is a good source to go to because they're your point of contact for paying your bills. Also, the National Consumer Law Center has a student borrower assistance site, which is very reliable. And of course, I've added the Maryland Center for Collegiate Financial Wellness. We also have a Facebook group that's getting started. It's our Marylanders with Student Loans, our hub for strategy and support. The third thing we'd like for you to do is to review your options. If you have a student who is going to be in school for this academic year, of course, you have to figure out how to pay for it. If you're already on a path toward forgiveness, borrowing another federal student loan as a parent is going to eliminate that path for you. So if at all possible, maximize the gift aid. That's the financial aid that doesn't have to be repaid. In order to find that, I'd say start with the institution itself. See if the school has general scholarships or grants. Look at the academic program that your student is pursuing and go to that department chair and see if they have any scholarships or grants available for students in that major. You can look at the government, your state level, county level, or city level, your employer to see if they have any benefits. Of course, federal student aid to see if there are any grants that your student qualifies for, and private lenders. I'm not pushing private lenders as a source for you to borrow from. A lot of the private lenders also give out scholarships. They may not be huge, but every little bit helps. And if it can help you as a parent maintain your pathway to forgiveness, then go for it. When you're going for it, though, we would recommend setting up a separate email address for all the correspondence that comes from the scholarship and grant search, as well as the private lenders, because for their scholarships, many of them don't require like an essay or much, but they want your email address because they're going to offer you private student loans. So set up another email address dedicated just to that funding search. The other thing we recommend is that even if your student is not in school this year, let's say your student is going to school in 2 or 3 years, you can complete the FAFSA now just to get a feel for what federal aid your student may qualify for. So verify and document the history of your current student loans. Stay connected with what's going on and review your options for the future, because we want you to make strategic decisions. And if you're on the pathway to forgiveness, we would love for you to be able to preserve that pathway in the face of these changes. All right, 3 things not to do. The first thing is tune out. Please do not ignore communications from your lender or your servicer. I'm not sure what the Department of Education is communicating right now. If anything, we have seen less communication from them. And even with some of the mistakes that are happening or that we're seeing on the website, they're not being as forthcoming about those mistakes as the previous administration was. So you may receive communications from them that have conflicting information. Do not be discouraged. It's happening to a lot of people, or you may not hear anything at all from a while. That's happening to some people as well. But if you want to tune in and see if you have any messages, go to studentaid.gov. There's an inbox there, and also your servicer's online portals. The second thing is to please do not take cookie cutter advice. Again, don't make decisions based on sound bites. Your repayment decisions should be strategic. And in order to be strategic, it needs to account for you, your household finances, your loans, your students' loans, all of that information that sound bites definitely do not capture. Again, I refer you to the NCLC student loan borrower assistance page, as well as us at mccfw.org. The third thing, and I have this in red because this is the not to do list. Please don't do this. If you are a legacy borrower, please do not consolidate your federal student loans right now. I'm saying this, as a broad direction because if you have older loans and you consolidate them now, your new consolidation loan will make you a new borrower. If you are a new borrower, you will have fewer repayment options. You will have no pathway to income-driven repayment forgiveness and no pathway to public service loan forgiveness. So if you're a legacy borrower, I can confidently say, do not consolidate, okay? Because that is something that will greatly restrict your options and completely remove your access to the largest types of loan forgiveness that currently exist. All right. Now, before we open it up for Q&A, I just want to share this, and that is about how to tell if your loans are in good standing, because we said to verify and document your loan statuses. Two statuses that are not good are being delinquent and default. Now, it doesn't take much to be delinquent. You can miss one payment and you're delinquent. It's not that big of a deal. And it doesn't get reported to credit bureaus until you're at least 90 days late. But we want to try to keep the loans in good standing. What we want to make sure, though, is that you're not in default. Default means that you have missed payments for at least 9 months or 270 days. The consequences of default range from, of course, negative information being reported to credit bureaus. You could have your professional licensure revoked. Transcripts can be withheld, and that would prevent you from being able to provide proof that you have completed certain coursework for certain positions. You wouldn't be eligible for any additional federal student aid. So if you wanted to go back to school, you'd have to pay for it out of pocket. Lots and lots of really extreme collections measures, and you don't want to expose yourself to that. So to make sure that your loans are not in default, go to studentaid.gov. If they are in default, you'll see a red bar across the top of the dashboard that lets you know you have at least one federal student loan that's in default. And then you can begin to take the steps to get it out of default. One of the steps that they may recommend to you is consolidation. Think about that very carefully, because if you consolidate, you'll become a new borrower. You'll have fewer repayment options and no forgiveness options. So the other pathway is rehabilitation. It takes a lot longer, but it may be worthwhile if forgiveness is something that you want to get back on track for. All right. So that does it for the informational piece of this evening's webinar. I thank you so much for joining us on this Tuesday evening. If you are an existing client of the Maryland Center for Collegiate Financial Wellness, or if you met with me through my own individual student loan strategy advising sessions separately over the past 5 or 6 years, please reach out if you'd like to get the link as an existing client, because it is cheaper. It's only $59 to schedule a check-in for existing clients. If you are a new client, then you can visit mccfw.as.me to schedule a strategy session. For new clients, you get 2 sessions, and the cost of that is $139. But if you feel like you have a good grasp on this, a good grasp on your inventory, then hey, do what you think is best. But if you need another set of eyes, a more strategic lens, then please do go ahead and reach out. And with that, I'm going to pause the recording. I'm going to stop it all together, actually, so that you can ask questions and not be